When you look at the problem that the Fed has, the Bank of England and the ECB with targeting inflation, do they have to really crush economies to make sure that they hit their targets?
Well, they're not crushing the economy because the problem arises from the fact that the economy is quite resilient. We haven't seen a recession in spite of forecasts of recessions.
Right.
So the economy is stronger than expected, which means that inflation is higher than expected. And probably it means that interest rates have to be higher for longer. And there's no free lunch. I mean, in order to bring inflation down, there's no historical experience of inflation coming down without some cost to be paid. You have to be careful to calibrate well your instruments. But in the end, you can't give up. Right now.
But why have we not seen an uglier economy right now? So is there a lag time of the monetary policy that was put in place in 2022, or has the model and structure of our economies fundamentally changed?
Well, first, certainly monetary policy operates with lags, 1.5 to 2 years, so we have to see the impact. And probably the models that central banks use know that, so they have this. But our economies have been more resilient. If I think about Europe, with the increase in interest rates, the increase in energy prices, companies, households have used their savings. So we have been more resilient. How long will it last? That's to see. I think the key issue going forward is the combination of the various policies. Monetary policy is going to be tighter.
Yeah.
Fiscal policy probably is going to be tighter because we have to come down from the deficits. And the other issue that nobody really talks is prudential, supervisory policy on banks. And this is also getting tighter because supervisors are getting concerned about banks lending too much and so forth. So the combination of all this may lead to a policy mix which is very restrictive. Yeah. And so we may reach 2% maybe earlier than expected, but the impact on the economy may be quite negative.
So what kind of an economy? So you think we could reach 2% inflation target earlier, but this would it be as close as 2024 in Europe? And what, a full recession for most countries, or how do you see that panning out?
Well, that's difficult, but I think it's difficult to forecast. But I think it's going to be difficult to get to 2% within 18 to 24 months without a major slowdown in the economy. And that's part of the adjustment process. On the other hand, if we give up, and let's remember, I mean, if you go back to history, Paul Volcker, which was a big inflation killer, he got it wrong the first time. He started to cut rates too soon. Then he had to increase rates again to up to 20%, the Fed fund rate in 1980. And this really crashed the economy. So we can't miss if we don't do it wrong. If we give up too early, then the price will be much higher.
When do you see peak rates actually in Europe? And again, I know it's a difficult question, but does it have to be in September? So do you have to just hike aggressively and then wait and see? Is that the better option, the better way to look at it?
My impression is once the economy slows down, it's going to be very difficult for central banks to continue increase rates. They have to say that they will do it. They have to talk very toughly, to be hawkish, but once you see strong signs of recession with unemployment going up, it's going to be more difficult. So I think this is why they are trying to catch up rapidly. So in the spring, until June, I think they will continue to raise rates, but after that, I think they will rather pause.
What are your clients telling you? So when you look at the first couple of months of this year, are they worried about inflationary pressures? You know, how's lending going?
Well, actually, there are no signs of major problems. I mean, our clients in general, and it's not a good sample because we tend to have the good clients of, it's the rest of the economy, which maybe is less supported by the financial system, who gets into trouble, that have problems. But our clients actually are doing relatively well. They have restructured. They are more cautious, of course, but they are not concerned about the future. The problem is the rest of the economy, which has to still do the restructuring. And once the consumption will start to decline because consumers will have to adapt to higher energy prices and will not have the savings accumulated from the past, at that point, we will see a sharper slowdown.
But is that accompanied also with the employment, a lot of unemployment, which we haven't seen for the moment? We have a very tight labor market.
That's a surprise. I mean, the economy have been doing relatively well, been quite resilient, especially in Europe. We didn't expect that. On the other hand, this shows that bringing down inflation is going to be easy. And we haven't had inflation for 15 years, so nobody really knows how far you need to put pressure on the economy to bring inflation down.